Namaste to all. Welcome you all on this Monday morning, the start of the week, 11 a.m. in the morning. And today we are having another webcast that is on unlocking mystery of royalty from the income tax, the international tax perspective. So yes, royalty has been a very, very big issue, discussing especially after the Supreme Court judgment on the royalties. But we had a special webcast, webinar purely on the Supreme Court judgment on the royalty. But now today we'll be talking from the basics of the royalty to the end. And for that we have a panel of speakers today, starting from CA Sanjeev Chaudhary ji, whom every chartered accountant knows very well, that he has been a past Central Council member. And just to tell you, friends, he was there in the Central Council for 2 terms. So for 6 years, in all the 6 years, he was either the chairman or the vice chairman of the International Tax Committee. So his contribution in the international tax is par excellence. And if you see any of the publications of the international tax, you will see that his contribution, even when he was not a Central Council member, he continued contributing to the publications and many webcasts. A regular contributor to the our diploma course in international tax too. So his contribution in the international tax for the ICAI is par excellence since the time he has been, and much before he was into the council, then also he was a regular contributor. Thanks Sanjeev sir for joining today as a panelist on the royalty. We have another of our speaker who is another chartered accountant, KK Chaitanya sir from Bengaluru, and he being having a more than 20 years experience in international tax and contributed lots of articles in ITR, Chartered Accountant, BCAJ, Taxman, CTR, and of course authored co-authored few books, and member of the study group of ICAI for the guidance note on transfer pricing, and contributed to the ICAI committee to a great extent. Welcome Chaitanya sir. And also we have another panelist who has been a regular contributor to our institute, Mr. Sanjay Kumar, who is an ex-IRS, and he is having more than 28 years of experience in the Indian Revenue Services, holding many assignments in the tax department as well as the other ministries. He has been member of the various expert committees of the government and also a representative of the WTO on the IPR trade specifications for 3 years. He is also an IMF impaneled tax administration assessor and has done World Bank assignments on tax reforms. Currently practicing into one of the big fours. Welcome Sanjay sir for being a panelist for this royalty sir. And all the 3 panelists, we have a moderator who is much, if not higher, but at least able to guide all the 3 panelists on the international tax. Our SP Singh sir, who is again an ex-IRS and having more than 30 years of experience, represented our country in formation of the double taxation avoidance agreement with more than 30 countries. Yes, his contribution in the International Tax Committee of ICAI again is par excellence. He is currently advisor to our committee, and various refresher course, these webcasts, the diploma courses, the publications. His contribution is excellent in making our members more aware about the international tax, which is the need of the hour. And today, SP sir would be moderating this session and handling all these 3 panelists. And wherever they need assistance, they can fall back upon SP sir. So SP sir, over to you for having a great learning session today for all the participants. And just to inform you, various questions have already started pouring in, like what will happen to the YouTube channel earners, and other questions are there. I'll just be sharing at the end. Over to you, SP sir, for the moderation. Unmute कीजिएगा sir. SP sir, unmute.
Thanks, Pramodji, for the nice introduction. In fact, the 3 panelists don't need a moderator. They are very, very experienced panelists, experts in their subjects. And the most beautiful part of this panel is that all three come from totally, I mean, if not totally, but different, I mean, the background. One is Sanjay, who is ex-IRS, but basically he's an economist, mathematician, and teaching in Duke University, US. So he has, this background of making complex things look simpler. Sanjeev, of course, I mean, a chartered accountant, and he doesn't need any introduction to this buddy. But yes, he's a person with whom I have been interacting for approximately 30 years. So I have very, very high regards, and I consider myself privileged to be, the moderator of the panel. And Chaitanya is chartered accountant, yes, but now he calls himself advocate. So he will bring, I mean, the legal aspect of our discussion. And I think all the participants must be eagerly looking towards various aspects of royalties, because in this world, I mean, I would say, which we are calling globalization, digitalization, but it is the knowledge boom which is happening. The companies are trying to develop the technology, and this development of technology is not a new thing. It has been happening over centuries, but the speed of, the generation or modification of technology, its implementation, going to the next step, has increased, and COVID pandemic has caused a lot of heartburns and the damages to our psyche and everything, but it has given impetus to the development of technology. And if we slightly look back, I mean, only a couple of decades back, the big companies or the daddies were IBM, ExxonMobil, P&G, GE, and 3M. All of them had majority of their assets in the form of tangible. And now, which are the leading companies? If you look at the list, they are Apple, Alphabet, that is Google, Microsoft, Amazon, and Facebook. All these are technology company and having intangibles as the major portion. Recently, I read in an article by McKinsey, and there they have identified, in fact, 7 things which are going to happen in the post-COVID era, and what they observe is that the technology investments are creating significant business value. 1, 2, broader use of advanced technologies support greater value creation, and thirdly, bridging the technology gap is the target or is the challenge for the business. Now, how are they doing it? Some of them are, of course, creating, I mean, intangibles, but majority of them are either buying or taking on rent, I mean, the technology. And there comes the issue of, the royalty. And when Supreme Court pronounced a decision in case of software, I think that was one of the most awaited decision, because it has, or it is, and it will impact almost all areas of business. And but before we go into, I mean, the decision of the Supreme Court, how technology will unfold, what are the challenges which are going to take place in the years to come, it will be very, very important to understand the basics of royalty, what it is the definition. Then we go on and try to understand, is it the same thing as fee for technical services? Is it different from the business income? Those are the questions which would be coming in the minds of the participants. I mean, even those who are quite experts would like to listen from the 3 friends, I mean, who are going to share their experience and knowledge on various aspects of intangibles. Just to start, I will request Sanjay, because he is a guy, I mean, he is a person who goes into the finer aspects or the fundamental issues of any question. You give him a question, and he will first try to say, where is the Income Tax Act? That's what Sanjay is. He doesn't say which is the case law we are relying upon. That's the last thing which comes to. So, Sanjay, I mean, knowing you, I mean, you would like to share your views about, the fundamentals or the development of the definition and the taxation of royalty, so far as India is concerned, and of course, on the global, I mean, OECD or UN. Sanjay.
Oh, thanks, sir. The problem is that if you put a very high mark on me, then the chances of its failure become far better. So, but and the recent the World Test Championship was one such example that Indian team, which was considered one of the favorites because they were the overall focus on them was very high, but their performance was not as good. But certainly on the royalty part, it's very important to also start looking at from a little bit of history. I don't want to, because this is which is talking about the economics and commercial and legal aspects, tax aspects, but it's very important to also know how the history of royalties have developed. In India has had a very rich IPR laws even during the colonial rule. And the first IPR application was made in 1856. And that is something actually. One thinks that the IPR is something new, but then the IPR first application was done by George Alfred in 1856. I think subsequently later on. But the form of the IPR laws, what we see today, is something which has come in the independent time. So today we are looking at 7 IPR laws, starting with Copyright Act in 1957, Trademarks Act, which is 1999, which has been revised, Design Act, which is very recent, Patent Act, which was of 1970. There was an earlier Patent Act, which was revised and then adopted, which was, so it came in 1970. Geographical Indications of Goods Act, which is GI, which came after the WTO, our accession to WTO, and came in 1999. Protection of Plant Varieties, Farmers Act 2001, and the Semiconductor Integrated Circuit Layout Design Act came in the year 2000. So some of the 2000 and 1999 Act that I have just referred to, they came after India acceded to WTO in 1995. So WTO has had some impact on the way our IPR laws came. But the introduction of royalty as a word in the Income Tax Act is somewhat recent. When I say recent, it is still about 45 years ago. But in 1976, but recent if I take a very elongated time since 1856, so when the Patent Act, etc., were already coming on the in the other acts or statutes, I should say, and its taxation was largely business income, part of the business income. So the approach actually changed after the Finance Act of 1976, when a special tax regime was brought in for taxing the royalty. And with that, the legislature also defined the word royalty. No doubt, the coverage of royalty has changed many times after that, but the change in 1976 can be considered to be a watershed for Indian taxation of royalty. Now, what I have flashed on the screen is to just give you an idea of what the Act says, which is basically in explanation 2 to section 916. Consideration. Now, consideration basically either it is lump sum payment, or it could be an annuity payment, or it could be as you use. So based on that, it talks about the lump sum consideration for transfer or any of any or all rights, use or right to use as per the 6 or 7 clauses that I have mentioned, but excluding any consideration the income of the recipient chargeable under the head capital gains. So that is a very important one, that if it is something which is getting into the capital gains, that would not get covered here because that's a transfer. But here we are talking about the royalty in terms of its use. We talk about basically you're talking about one which has an IPR element. Next major amendment, I'm not going into that, and people can just read that on this, but the next major amendment came in the year 2001, which added one more subclause for the right or use or the right to use any industrial, commercial, or scientific equipment, but not including the amounts referred to in section 44B. So that makes it somewhat more complex. And it was because it was felt that this clause was there in some tax treaties, and the absence of the clause meant that these payments were not included in the definition of the royalty, and so they would be at the business, and so no tax could be there, as the taxpayer would want to take shelter under the term definition. So it provided a little bit expansion in the term, and which made it somewhat wider. The next change, which came in the year 2012, which you will find it on the next slide, where they brought explanations 4, 5, and 6 to section 916 of the Act to clarify that the consideration for transfer of all or any rights for use or right to use a computer software, including granting of a license, etc., would be income by way of royalty. This is like a new economy being considered, and software, etc., because there was a lot of judicial decisions on that, which had interpreted that the definition of the royalty in a manner which had raised a little bit of doubt on whether the consideration for use of computer software was royalty or not. So explanation 6, in view of the doubts raised regarding the meaning of the term process, that was another issue. And the payment for transmission of satellite, cable, optical fiber, or similar technologies as payment for usage of process was made taxable as a royalty. I am not really deliberating and going into too much of detail, because subsequently we are going to talk more on that in quite a bit of detail. The next amendment came in 2020, when the Finance Act deleted. Now, this is very important. It deleted the one particular clause which said, but not including consideration for sale, distribution, or exhibition of cinematographic films in clause 5 of explanation 2. That was on the first slide, that you may have seen that in red I had deleted a particular line, because it was felt that such royalty is not taxable in India, even if the DTA gives India the right to tax such royalty. Such a situation, they felt, is discriminatory against the Indian residents, and so India, since in any case India had to forego its right to tax royalty in case of non-resident for many countries, so they felt that this is discriminatory to our own residents. So they deleted that aspect. This is one of the acts which is talking about a kind of rolling back, something which was there earlier and for considerable period of time. Let me move to another aspect which is very important, which is the tax rate. The royalty income, the tax rate, has also seen the similar increases and the rollback. Before 2013, if you can change the slide, I think the tax rate for royalty as per Section 115A of the Income Tax Act was 10% on gross basis. However, the rate was amended by the Finance Act 2013 to 25% because they felt that we need, because this was going by withholding, so why not have a larger share in India? But soon the government realized that this will probably discourage technology, and that you need efficiency in the business ventures. You need a larger policy statement which is in sync with what the world thinks. And so in the Finance Act 2015, they went back to the 10%. So today, it is applicable rate is at about 10%, and with that, of course, the applicable surcharge and educational sets, if they need to be added, they would be added. That in very short, I'm trying to be as quick and as covering a very large period of time when the changes in the royalty definition as well as the rates have taken place.
Thank you, Sanjay. I mean, for really nice summing up the position. We have, I mean, apart from Income Tax Act, we always rely upon the OECD and UN for explaining any transaction. And even in respect of the royalty also, the same thing applies. I mean, what is the position of any OECD or UN model and the commentary there too. We will come subsequently. But to start with, I will just like to understand from you, is the definition in UN model or the OECD model same as in Indian law, or are there fundamental differences? If you can share, I mean, very brief.
Well, the OECD model came out in 1963, and it has been changed many times over. First such revision took place in 1977 when they brought the royalty article as Article 12, and they said that the royalty as used in this article means payment of any kind received, which is there on the screen. There was no agreement on the definition. In fact, some developed countries were of the view that the definition made an imperfect distinction that constituted royalties in the strict sense, because they, they said that the payments have to be for the brain work or for surveys or something like that, which is something to do with that. The IPR, intellectual property creation. They were also of the view that the one line that information concerning industrial, commercial, or scientific experience should not be included in the definition as the payment in respect of which would not be taxable as royalties. So this was a developed country's perspective, because OECD is a developed countries club. But that was opposed by the developing countries, and they felt that the developing countries, they were looking for far more far more coverage of the royalty in the tax convention, because that would set also the stage for the tax treaties which the various governments would do. So they really opposed it. But subsequently, I think in 1992, they dropped this particular clause on the right to use industrial, commercial, or scientific equipment, and the modified definition continues. UN model, which came following the OECD model, and included that. And that was basically to talk about the developing country perspective. And that actually is a significant difference between the OECD and the UN, because the OECD talks about the residence-based taxation, where the UN talks about the source-based taxation. So UN has the developing countries' perspective in view, whereas the UN OECD has largely the technology givers' perspective, and they want everything to be taxed at the residence level. So the definition that got included was basically to make sure that the owner of the equipment earns profit, and then can also the developing countries can levy a withholding tax on such payment, and that, according to if you do the analysis, that is the one important difference between the two. But if I have to take it to the how the Indian DTAs have changed over a period of time, or what was it, how they see the whole thing, then as I said earlier, 1976 was the real watershed years, and if you see the earlier DTAs, because there were Indian tax treaties signed with Sri Lanka in 1957, and then subsequently with Norway in 1960. Each of them had a clause on the royalty, but the real, the evolution of the clause took place after 1976, when the definition and started coming together, and which had a far and it borrowed many of the things from the Indian Act. And one of the changes that we have seen, and which I also mentioned some time ago, that they rolled back because the Indian residents were getting unnecessarily paying taxes on the cinematography part, and that has been removed because the others were not paying. So the Indian tax treaties have also been making changes and trying to be as close to the overall thrust of the how the landscape in the world is changing. So it's a very dynamic field, because as you yourself mentioned right at the beginning, that the companies which were having the tangible assets are far moving towards the intangible assets, and it's the overall thing that we see is that the intangible assets are really taking hold of some of the top companies, and those companies which have the larger intangibles are really, having the bigger economic say or commercial sense in their world. So I'll stop at this, and if there is anything, then I can.
Thank you, Sanjay, for very nice overview. This is giving rise to several questions, and I think 2-hour session may be quite short to discuss all of them. So we will try to, restrict ourselves to some of the points which you have underlined. All the issues which we will be discussing are related to the definition which Sanjay has recently discussed. There are different rates for taxation in respect of royalty and business income, and the definition itself. So, Chetan, one question which always comes in my mind, and sometimes I feel very lost, is regarding the difference between royalty and FTS. In fact, today I was going through some of the decisions in one of the portals, and the question was royalty/FTS. So, is this, are both of them identical? When we use slash means, identical. But to my mind, it doesn't appear to be so. What's your views about this?
Yeah, in fact, to answer this question, we will have to divide this into 3 categories. Between the royalty and FTS, where are they similar? Where are they different? And where do they overlap? So let's take the easier one first. Where are they similar? The tax treatment under the domestic tax law as such is similar in terms of, as you would know, 916. clauses ABC, 917 clauses ABC, read with section 115A, where the tax rate would be just the same between the two. And if royalty and FTS is effectively connected to the permanent establishment, you would know both of them would be treated as business profits in terms of section 44DA, in which case the net taxation would arise. So this is, the similarity which you could possibly see. But then the difference is essentially found in the terms which are defined in the respective explanation 2 to 916 and 917. So if you would look at explanation 2 to 916 and would look at various clauses there, barring the last clause, the rest of the clauses essentially would deal with, the IPR related aspects, where there is a technology transfer. It could be transfer of all or any, rights. It could be granting of license. It could be imparting. Imparting is not just communicating. Imparting would require a know-how transfer. It could be imparting the information concerning the use, or it could be imparting commercial, scientific, industrial, experience, knowledge or skill. So as you would see, the activities which are referred to as giving rise to royalty income are IPR related. Whereas if you would look at explanation 2 to 917, the most critical word that appears there is rendering. And you use this word rendering in the context of Supreme Court in Kotak Securities case in 383 ITR 1. Where it has said that there has to be a human intervention. Same could be the decision of Bharti Airtel's proposition as well. So where the human intervention is essential and there has to be rendering insofar as FTS is concerned. Insofar as royalty is concerned, this is not a sine qua non. So when I transfer technology, I don't have to render anything. So there lies the material difference between the royalty and the FTS. And one overlapping part, which is very important to understand, is that if you look at explanation 2 to 916 and kindly look at clause 6, which also would use rendering of services in connection with the activities referred to in the preceding clauses. So to that extent, there is an overlap between what is FTS and what is royalty. But because we apply the principle of generalia specialibus non derogant, where the services rendered are in connection with the activities which are trapped in royalty, these rendition of service also will have to be regarded as royalty. So whenever there is an overlap, the preference will have to be in favor of it being called as royalty if it will fit into the last clause of explanation 2, provided it is in connection with the activities which are regarded as royalty. So this is where you will have, the material difference. But when it comes to the double taxation avoidance agreement, there could be material difference in terms of scoping. Because as you would know, many treaties we would have to make available clause as an extra covenant insofar as FIS or FTS is concerned, where such thing is not available here. So wherever it is intended by certain treaties that they will have to tax only those services which will have the trappings of technology transfer, like in Indo-US treaty with the make available clause, Indo-UK treaty with the make available clause. There they have, said that the FTS is almost akin to royalty in terms of there has to be a technology transfer. If there is any rendition of service, dehost the technology transfer, they would rather want it to be relegated as business profits. So this is where you will have the difference from the treaty perspective. So this is the aspect that will have to be possibly, kept in mind as you would see the difference between the royalty and the FTS.
Thanks, Chaitanya. It's very, very useful. Sanjeev, I think you have to unmute yourself.
So the only point I would like to add to what Chaitanya said, I think the Supreme Court, while passing the Bharti judgment and the Kodak judgment also, I think said somewhere that with the changing technology, I don't know what will happen in the coming years, that whether the human intervention would be really required or not, and the services can be rendered by way of technology also, which may happen in the coming years. And that is where I think Justice Kapadia then said that I think one must understand how and what is being done at the original level when the assessment, etc. is being done, so that when the courts have to see them later, like Bharti's case was sent back to the AO. I mean, it shouldn't happen that, the High Courts and the Supreme Court is looking at what has happened and how the services are rendered, etc., with the change in technology and much more in the current scenario with pandemic and everything gone virtual. I think a lot of things will change as we go along on the thought process on the technology transfer also and rendering of services also to make it FTS or FIS. Just a short point I thought I'll add coming from the Supreme Court.
No, it's very important, Sanjeev. For the participants, I would request them to rehear what Chaitanya was discussing about making the difference between royalty and FTS, because it is very important. From the domestic law perspective, it is same because the concept of source-based taxation or the rate are the same. But the moment you move on to the DTA, then the difference starts becoming wider and wider. There are several tax treaties of India where royalty is defined but FTS is not defined. The moment FTS is not defined, then the question arises, whether it will be a business income or liable to taxation only when there is a permanent establishment, and other questions about that. But this brings me to one question, Chaitanya, is that how our participants who are new or not so very, experts are trying to become expert in international taxation, differentiate between what is royalty and when will it become business income?
This is an extremely important question, and I will have to thank you for raising this question, because as you would know, the source-based taxation would vary in terms of business income vis-a-vis the royalty income. So it's a lot easier for department to tax royalty income because territorial nexus is very easily seen from the point of view of who the payer is. So if you would look at 916 or 917, so you have the criteria of who pays. That will decide whether in the hands of the recipient it is chargeable to tax. Whereas if it were business income, it will come with an extra requirement that it has to have a business connection, whether the generic business connection or business connection by way of agency business connection or business connection by way of significant economic presence. So this is from the point of view of the domestic tax law. So when it comes to the treaty law, of course, if it were business income, it will have to be treated under Article 7, read with Article 5. And if it is to be regarded as royalty or FTS, it will have to be treated as, royalty income or FTS income under Article 12 or 13. But the most vital difference between the two is that to tax business income, there has to exist some sort of a virtual projection in this jurisdiction, which is not required in the case of royalty and FTS. That is where, as you have very rightly and aptly pointed out, where the tax practitioner will have to wonder whether a particular payment would fit into royalty or fit into business income, because it's a lot easier to avoid tax if it were to fall into business income. Why it matters also to the payer is for the reason that most of the recipients would say, look, hey, tax is to your account. So which will essentially mean the payer has to gross it up in terms of Section 195A, which will mean the burden of tax is borne by the payer himself. So even as a resident payer pays, he will be extremely concerned about the tax effect, and he would be quite keen on putting it under, business profits. However, as you are aware, effective 1/6/1976, they have added 3 clauses to Section 9(1). Clauses 5, 6, and 7 dealing with interest, royalty, and FTS. Now, once these clauses have been appended to Section 9(1), then even though this interest, royalty, FTS do have the trappings of, business, because royalty may have been earned in the ordinary course of carrying on business. FTS would be earned by service provider in the ordinary course of his carrying on business. But because special clauses as such have been specifically inserted in Section 9(1), and on the basis of principle which I said a little ago of generalia specialibus non derogant. So whenever an income would specifically fit into clauses 5, 6, 7, more particularly in your context, clause 6 is royalty, it is only apt that it has to fit into the clause 6 of 9(1) and will have to be accordingly applied. And another important point is from the payer's perspective, as you would know, if it is treated as royalty, it will have withholding implications, and any failure to withhold would mean 40A1 disallowances, and the assessee will have to run the risk of, being treated as an assessee in default. So in the matter of withholding, I would urge the tax practitioners to follow the principle called ex abundanti cautelam. What does it mean? When in doubt, go ahead and deduct the tax at source. You don't plan it for the receiver. You plan it for yourself. So you are now planning it for the receiver. Now, that apart, having said this, there are some more aspects which will have to be possibly borne in mind. While the general rule is that what fits into royalty will remain as royalty and will not have to be treated as business income, there are some exceptions. So what are these exceptions? These exceptions are found, for example, in explanation 2 itself. If you look at explanation 2, clause 4a, which will deal with the equipment royalty, it excludes, the income which is chargeable to tax under 44BB. What is 44BB? The royalty and the services in connection with oil exploration. So whereby the law itself has delineated it and it cannot anymore be called as royalty. It has to be necessarily be taxed as business income in terms of 44BB, where you will have the presumptive taxation of 10%. Then another query which possibly will arise in this context is that, many times payments are being made. A question would arise whether the payment which I make, say for example, a distributor makes payment to the principal for distribution of certain goods. These goods are sold with, like enormous trademark utility. The question would arise as to, is it necessary that whatever the distributor pays to the principal, the consideration, is it necessary to split the consideration between what you pay for the goods and what you pay for the trademark? So a very interesting question arose in the context of Formula 1 decision of the Delhi High Court, not the Supreme Court. In Formula 1, the department wanted to call $40 million, which, FOWC received from GM. The intention is not towards payment for use of trademark. It is for conduct of race and earning ad revenues, etc. As a result whereof, it should not be treated as relating to the IPR. So what I am coming to here is that the substantive purpose of payment will have to be seen. If the substantive purpose of payment is towards purchase of goods merely because it will have some trappings of royalty, it should not be treated as royalty. I'll just give you another illustration of the Supreme Court decision in Japan Airlines case in the context of 194I, which is reported in 377 ITR 372. Department wanted to, say that, look, a particular aircraft that lands in an airport is paying for use of land, and 194I would get attracted for the purpose of withholding. So Supreme Court said, look, landing and use of immobile property is an incidental thing. It is, in fact, a payment made for the facility. You have the ATR, you have the whole lot of infrastructure. It is just that the aircraft lands, and it cannot be called as like a payment for use of land. And if you look at another interesting decision of Supreme Court in Ericsson's case in 343 ATR 470, where a software is sold as an embedded part of a GSM equipment, consideration cannot be vivisected. So the dominant test theory will have to be applied. If the dominant test theory is applied and if it directs towards payment for goods, the whole lot will partake the character of business income. It is impermissible to split this indivisible consideration as towards goods and as towards the IPR. The whole lot will have to be treated as relating to goods, and then therefore the entire thing will become business income. So this is another point which a possible viewer will have to keep that in mind.
Yeah. Thanks, Chaitanya. In fact, there is urge in my mind to ask you, all three of you, about Supreme Court decision on software, but I'm holding myself back because I have a couple of fundamental questions before I go on to, very erudite explanation from all of you regarding the Supreme Court decision. The two fundamental questions.
SP sir, before you go further, what Chaitanya sir said, what Chaitanya said, from a beginner's point of view of international taxation. So if I say and summarize that royalty and FTS both are per se business income. However, for the international tax perspective, if it is within that business income, becomes a royalty or FTS as per the definition under 9 or DTAA, then withholding would be there based on the source rule. Is it so? Otherwise, per se, if it is a royalty or an FTS due to a PE in India, it becomes a business income, and then it would be not covered under 9(1), and then it would be a normal tax of 40%, whatever is there. So is this a general view? Okay, fine.
Yeah, that's the view which I will endorse. Yes.
Yes.
Great.
Thank you.
Thank you.
When you were talking about Pramod, and you raised very, very good question, it brought, that out of two fundamental questions. One is that we have been talking about what's in the nature, in the hands of the payee. But what about the payer? The payment as a royalty, it can be revenue, it can be capital. So what is the interplay? From the payer's perspective, Chaitanya, how to differentiate? Because this is going to be very, very basic question. Even in case of software, when you make a payment, if the payment is large, the tax authority can say that this is a capital in nature, and everybody else can say that no, it is revenue in nature. So that's question I think must be bogging the mind of all the participants here, including us. So if you can give some view about that.
Yeah, here, firstly, the fundamental principles of treating whether a particular payment is revenue or capital would remain unchanged, irrespective of whether you pay a royalty or you pay FTS, you pay for purchase of machine, you pay for travel. No, these principles would remain just the same. You have Empire Jute Industries case, 124 ITR 1, you have Jonas Woodhead case, you have, like host of decisions. In as much as now, jocularly people would say if doubt arises as to whether it is revenue or capital, just toss a coin. Head revenue, tail capital. It has come to that passe now. But then, being more specific in terms of royalty payouts. So usually what is royalty? Of course, explanation 2 would say even a lump sum payment also will have to be treated as royalty. But generally, the royalty would have either the lump sum component or the periodical components or a hybrid of both. You will pay X amount as lump sum, Y amount on a periodical basis on the basis of your sales, production or whatever. Now, the general thinking amongst all of us is that, okay, if I pay it on the basis of my production, on the basis of my sales, it has to be ordinarily regarded as revenue and there should not be any difficulty in it. That is how one would look at it. Even from a beginner's perspective, every year I am paying here on the basis of my sales and turnover, and on what basis should it be called as the capital expenditure? Because it is on an annual, going on. It's in the revenue field. It's the normal business operations which have been exploiting, and hence it has to be regarded as revenue expenditure. But then it took a different perspective altogether in Honda Seals case in 395 ITR 713. There, it was found that although the royalty was paid on the basis of the production that is achieved and the turnover that is achieved, the technology that was acquired was used in setting up the plant. Because it was found as a fact that the technology for which you may be paying deferred payments based on your production year on year for X number of years, but the technology was used by you in putting up your plant. Therefore, the Supreme Court said, irrespective of the measure of payment, you are aware of Ponni Sugar's case in 306 ITR 292. Measure of payment would not decide the nature of whether it is capital subsidy or revenue subsidy. So is the case here. They have said that measure of payment may be your annual production, but what have you done with the technology that has come to you? The technology has been used in setting up and putting up your plant, and hence it is in the capital field, and on which basis the Supreme Court said it is to be treated as capital expenditure. And then the assessee came upon a review petition saying that, okay, if I've treated as capital expenditure, at least allow me the depreciation, which the Supreme Court was kind enough to grant. And in fact, it is not a stray decision where, the players in this field have to be mindful of. The Karnataka High Court, again, in a very recent decision of 2020 in telco construction, likewise held on the basis of Honda Seals case. And a reader will have to look at an old circular of the Central Board of Direct Taxes, a beautiful circular 21 of 1969. It has dealt with both, like when it would be a capital expenditure or revenue expenditure. It has also dealt with when it is a capital receipt or a revenue receipt from the point of view of the recipient. So these will have to be kept in mind. And I would urge that those who would pay for technology will have to clearly have two separate agreements. One for setting up the plant, the other one for use of this technology for their ongoing production activity, so that they would not end up like in Honda Seal's case, losing the benefit of deduction for all the years to come, because the moment it is traced to setting up of a plant, no matter how many years you will pay, it will have to be necessarily treated as capital expenditure. So you have to be extremely careful of this proposition. Apart from the other aspect that withholding and your, failure to withhold would entail the disallowance under 40A1 and 1A. Those aspects, of course, the delegates are quite conversant with. But this is one aspect which will have to be mindful of. Those who would plan their, setting up of plant, etc., will have to be very, very clear about what are they paying technology for.
Thank you. Thanks, Chaitanya, for such nicely, differentiating. It's very, very important. I think all the participants must keep this in mind. Before I go to Sanjeev on Supreme Court decision, I have only one question, Sanjay, for you. We have been hearing about, the economic ownership, legal ownership, particularly in respect of, intangibles. So what is the core thing? How will the participants who are not so expert differentiate between the two? And what are the basic implications?
So, again, if I have to compare with something intangible, then the obverse of this is, I'm not saying opposite, is the tangible. So the concept of ownership in tangible properties is very well laid out. Everybody understands whether I'm an owner of a house or a building or anything, which is what I can hold it, is there. But the concept of intangible ownership has been quite new, actually. And if I have to go back and say when it actually started, then it has to be the Paris Convention for Protection of Industrial Property, which is basically the mother convention on which the patent laws developed, I think 1883 or so. And the Berne Convention of Artwork, which is of 1886, which is Copyright Act. So those were the time when those were the conventions where they brought the aspect of whether somebody can be an owner of the intangible. And why I'm trying to talk about this is because the legal ownership that you talked about, I have to compare with the economic ownership. Then I have to first establish that there is a legal ownership of the intangible. So intangibles intellectual property rights are the exclusive rights that have been given to a person for creation of a certain IPR for a certain period of time. And those periods of rights could be 20 years for patent, or for copyright. In India, it is 60 years, but in other countries, it could be 50 years. Now, the concept of economic ownership is new to the Indian lexicon. And Delhi High Court, the first time, I think, in the LG case, recognized the concept of economic ownership. The High Court dealt with this issue by stating that the onus to demonstrate economic ownership is on the taxpayer. However, it did not give any guidance on what are the objective parameters on which something would get constituted for an economic ownership. UN Manual discusses the concept of economic ownership in Chapter 5 and says that the economic ownership of a product, trademark or trade name, considering the marketing intangible. And this is where the Delhi High Court was debating in its judgment, can be created based on the subsidiary's contribution to a strategy. And obviously, no authoritative view of this is available even in the OECD. So according to me, it is somewhat notional and not really very, very objective. But now that it has come, we all are trying to figure it out in the best possible manner. Of course, the OECD BEPS document suggests about the economic ownership and talks about that the economic ownership would take into account the risks and rewards. I am a little hesitant to introduce the concept of BEPS at this point of time because we have not really gone into that and to tell the viewers straight away that kindly read actions 8 to 10 for the economic ownership. That will be too much. But what is very, very important is that the concept of economic ownership has come into being, and it is somewhat not very clear. There is no objective conditions, but economic ownership is largely in the case of somebody who is not a legal owner and is using the product or the IPR for his own benefit, and there is no contract between the two entities for the usage of that. But in the business, they are developing that and thereby they are creating a little bit of better trade name or something like that. And so over a period of time, certain risk and rewards start becoming available to the owner, the actual owner, the legal owner. And then how do we do that? And so the arm's length principle becomes very important to say that what is the risk that the economic owner is taking on its plate, how the economic owner will be should pay to the legal owner, all these questions. But I would not go into that much of detail because we have not yet talked about the BEPS till actions 8 to 10. But the concept is there, and India is new to this, actually, I must say.
Thank you. Thank you, Sanjay. There are several points which have been raised by Chaitanya.
Yeah, can I just add a couple of things to what Mr. Sanjay said?
Yes.
Yeah, this is extremely important question about the economic ownership. From the point of view of Indian developers who are captive service providers. Now, in India, you have for captive service providers who would have the development center and would develop certain intangibles which will be eventually owned by the overseas, like holding companies. But then you have to possibly keep in mind two things. One, of course, as Mr. Sanjay rightly said, actions 8, 9 and 10, which are yet to come into Indian thing. But the view of the CBDT is found in the circular on R&D. So there is a circular of Central Board of Direct Taxes and R&D, whereby they have said that if the local development entity, though itself ostensibly calls as a captive service provider, if the overseas entity wouldn't have wherewithal to manage the risk arising from this IPR, it would make the Indian subsidiary an economic owner. So what is the implication of that? Department would not be content with the cost plus model which you are working on. Tomorrow, if that IPR is sold by the holding company, a share of the booty will have to come to the Indian subsidiary also. So therefore, those who are captive service providers will have to ensure that the holding company which claims the legal ownership of the IPR will have to have the wherewithal to manage the risk of it. So it is in this context the board circular is extremely relevant. In fact, I'll have to commend the board for having gone a step ahead of actions 8, 9 and 10 in terms of the circular. The efficacy of the circular is to be legally tested is one thing, but the thinking in the mind of income tax department also will have to be kept in mind by the taxpayers. I just wanted to add this part.
Thank you. There are a couple of fundamental questions which are remaining, but before going into that, I think it is high time that we hear something about the Supreme Court decision on software. Sanjeev, I have been interacting with people and, the most of the participants which are here, many of them have expressed their desire because they know that the hearing went on for 6 to 8 days, I think, right from the morning till evening. And both sides argued a lot. I mean, so many points were raised and discussed. it may be almost impossible to summarize them. I think, but you are capable of doing that. So what the people are asking me is that if they can be told about the very basic arguments which were taken by the taxpayer, very basic arguments which were taken by the department. And one question, sorry, I am reeling out the questions for you because I don't want to hold back and I forget. So, the question is that the Supreme Court has not used the word copyrighted article. So, does it mean that it has forgotten or what it is? So, these three questions, and of course, when Supreme Court came to wrote voluminous order and finally came to the conclusion, which is, towards the end in 2 or 3 pages. So what were the fundamental things which the Supreme Court concluded? If you can, share your views, in brief, of course.
Very much, sir. First of all, I must acknowledge and thank Pramod for those kind words, and from you as well, whether I deserve them or not. I'm still a student. Sanjay is here. Chaitanya is here, you are here, or I think I'm still learning, and I think what both of them have spoken before me, it has added certainly to my knowledge of whatever I knew about these things a little more, which is thanks to them. I think before I go into the Supreme Court judgment, sir, let me just add one more thing on what Mr. Chaitanya said on the Ericsson's case in Supreme Court. I was fortunate to be, a part of this hearing right from the AO level, being, Motorola, Ericsson, Nokia's case. And I remember before the tribunal, when the hearing went on for almost 3 weeks in various parts, the first week, we debated on what should be the question, whether special bench should hear us or not, etc., etc. But to cut the long story short, it is about dividing the transaction, which Chaitanya referred to, that can you divide the transaction and look at one part or the other? Because somewhere the assessing officer had held that there is a PE and you are taxable, and if there is no PE, there is still a software and a royalty. Because, sir, in those equipment transactions, the supplier had given a value to the equipment and the supplier had given a value to the software also. And that is what the department said, that at least on software there should be a royalty. And the question, as Mr. Chaitanya also addressed, that they said, look, the value of software is given because there is a custom duty on software, and what custom duty should be imposed. And actually, fortunately, in those years, the custom duty was 0% on software. And the tribunal held that what is being bought is the equipment. You can't divide the hardware separately and software separately. To look at the total value of the equipment and don't divide. Just to add to what Sir said on that you can't divide a transaction to tax a part differently is another such, fact which came out of this judgment. I thought I'll just kind of address it for the benefit of listeners as to if they go back to the special bench judgment, they can find all these facts narrated there. Now, so coming to the Supreme Court judgment, I think first of all of us must know that it took almost 20 years for the SSC to reach the Supreme Court. And you can imagine the amount of litigation and the cost it would have cost to everyone. And as Mr. Chaitanya said, if you're deducting tax, you're looking after your own interest, deduct tax and move on. You're not looking at the payee. Wherever there is a doubt, deduct tax is what I think everyone would advise. But here actually the position was that deduction of taxes are very easy, but at times it gets added to your cost, number one. Number two, if you have a strong belief that tax should not be deducted, I think that belief must have a basis, and in these cases, if you look back today, people who did not deduct tax turned out to be correct. And I don't know what will happen to those people who have deducted tax. And now because of the Supreme Court judgment, some of them may have to claim refunds. Some of them would have filed tax returns saying that on this tax is deductible. Now, can they change their position? So I'm not going into those debates, but let me address what was the issue before the Supreme Court and what they have held, and the main points coming out of this judgment. So they actually had about 103 odd appeals, and they divided those into 4 different parts, as if there's a transaction between a foreign company and the end user here, a foreign company and a distributor in India and the end user, a foreign company and a foreign distributor, and then the end user here, and also the case of software which is bundled with the hardware. So they have kind of put up all these different kind of transactions. They looked at a number of end user license agreements, and they said, okay, we'll give you one judgment because they are almost similar. And wherever they looked at the treaty, also the language was almost similar. So first of all, what did they say on the deduction of tax? Because somewhere the issue always comes up, in spite of the GE Technologies case, as to what is the payer supposed to do. So the court very clearly said that you have to read section 459, which are the charging sections, along with 90 and 195 more machinery section, to say that the provisions of the Income Tax Act could apply only to the extent they are more beneficial to the SSC. So generally what we say is, the common comment which comes out is that between the Act and the treaty, whatever is more beneficial, apply that. That is what is commonly said. I think the correct word to use, in my view, is that first look at the treaty. The treaty is applicable to a non-resident subject to the conditions that, he has the benefit of the treaty. Income tax could apply only to the extent it is more beneficial to the non-resident. That is the correct proposition. I thought I'll just kind of clarify that one proposition. And second was the proposition that once you read all of them together, one has to see whether a deduction of tax is required or not. It is not that you don't have to look at the treaty. You have to look at the Act, the treaty, look at the totality of the situation, and then if the tax is not deductible under 195, because 195 is different than many other sections, one has to look at whether the income is chargeable to tax in India. So that's one proposition they've clearly held, looking at Vodafone's judgment and GE Technologies' judgment also, in taking positions from those judgments. That's point number one, sir. Second, I think very briefly touching on the Copyright Act. Why did they look at the Copyright Act? Because that is also, I think, especially maybe for my younger colleagues, it may be just a little more relevant to understand. You see, if you look at section 90, subsection 4, it says you must look at the treaty and whatever is defined in the treaty, that definition would apply. Now, if that word is not defined in the treaty, then you look at the Income Tax Act. And that definition, if it is defined in the Act, that would apply. Then one must look at Article 3.2 of the treaty, which says that any term which is not defined in the treaty, what should you do? You should look at the local laws of that country then. And that is where the Supreme Court said that one had to look at the Copyright Act, because a software, the taxability of the payments to be received by the owner of the software, owner I'm using in a very loose sense. I'm not going into the economic owner or the legal owner. That's concept as Sanjay ji spoke initially. I'm just using the word a little loosely. The court said you must look at section 16 of the Copyright Act and what does it say. And again, sir, because of the paucity of time, I will not go into the reading of the section. The court read it the section where they say if you have to look at the taxability of the transfer of the rights in a software, then you have to look at the Copyright Act. You have to look at section 16 very clearly. You have to see what does section 14A and B says on the meaning of the word copyright, because 14A and B has been analyzed properly in this judgment. And again, 14A and B is very clearly provided in this judgment also. One can look at the Copyright Act. I think another section which is very important for people to know when you're looking at this judgment is you must look at section 2O as to what is meant by literary work, because literary work means computer programs, etc. And then you must look at section 52, which talks about the infringement of copyrights, because somewhere a point was raised by the revenue to say that look, you are making copies for the use of the software, you're adapting the software, you're putting it on your system, etc. And the court said, well, that is permitted, because the section 52 very clearly says it will not be an infringement of a copyright if you make a copy of a software. Now, this judgment still talks about principle of exhaustion, etc. I'm not going into that. I will confine myself to much more on the software and royalty. And time permitting, maybe we can come back to it later. The court analyzed a number of end-user license agreements. And as you rightly observed, sir, the judgment runs into so many pages because they have brought out the extracts of a number of end-user license agreements to say, what do they say in majority? So if you look at the distribution agreements, the court observed that they were granting a non-exclusive, non-transferable license to resell the computer software. These words are very important. Non-exclusive, non-transferable license to resell the computer software, and it was expressly stated that no copyright was transferred either to the distributor or to the ultimate user. There was no transfer of copyrights. That's point number one. It also said, and the court has observed from the end-user license agreement, that no right was granted to a sub-licensee, nor there was any right to reverse engineer, modify that software, reproduce in any manner. So there was no transfer of any reproduction rights also. You could not remodify it. You could not give it to someone else, subject to certain conditions that supposing, and again, just to kind of complete this, supposing tomorrow Indian purchaser wants to transfer it to someone else, can he do it or not? There may be 10 conditions that supposing his business is getting liquidated, what is he supposed to do with it? He may give it to whom the business is going. So there may be certain conditions because of which the transfer may be allowed, but otherwise no transfer was permitted. And what was paid for by way of a consideration by the distributor to the foreign company was the price of a computer program or goods. So the point I think one was looking at is what is being transferred. It was goods, etc. The other important points there, I think, for all of us to note is that Supreme Court looked at a couple of the earlier judgments under different acts, because at times a position is raised by the revenue or the SSC, depending on where we are, to say, why are you looking at the other act? But the court in this case looked at especially two judgments of theirs under two different acts to say what is held there and why it is applicable here. So, for example, there is a judgment under the Customs Act in the case of State Bank of India versus Collector of Customs. And in that judgment, sir, the court had observed that there is a difference between right to reproduce and right to use. In as much as under the right to reproduce, there would be parting of the copyrights. When you give someone a right to reproduce, you are giving up your rights. But when you are giving someone a right to use, then you are not giving any rights. You are giving only a right to use. So they looked at the judgment in the customs case and said that whereas in the case of right to use, there is only a right to use, you are not parting with your copyrights. And that is how they looked at that judgment. Then they looked at the famous judgment in the sales tax on the case of TCS. And there they said what was licensed by the foreign company to the Indian company and resold to the end user directly supplied to the end user was in fact the sale of a physical object. And here in the answer I would raise a question and I think leave it open for the users to look at it. But that is where they looked at it and said what is being transferred. They looked at the different treaties and they also have very clearly said, as I think Sanjay ji had initially explained, if you look at the definition in the treaty and you look at the definition under 916, the 916 is a much wider definition, and they have actually given three reasons in the judgment as to why the treaty definition is narrower, the domestic law definition is much wider. The three reasons they have given in the judgment again are that the consideration under the Income Tax Act also includes lump sum consideration, which is not the case under the treaties. Granting of a license is expressly included within transfer of all or any rights. Again, under the Act, it is very clearly said there, granting of a license. And the third thing the court has observed is transfer should be in respect of any copyright of any literary work. So these are the three differences the court has observed. Now, I can, sir, go into only very limited, and I will not go into the detail. If you look at explanation 4 on which a great reliance was placed by the department on 916. And the court then goes on to hold that why it is not retrospective, because it is not clarificatory, because it expands the definition. And once there is an expansion of a definition, it will not hold good, and they have given reasons as to why the word computer software, why in the Copyright Act, when these definitions got amended in 1994, why the explanation 3, which came in 1991, and this explanation 4, which is sought to be introduced with retrospective effect from 1976, will not hold good, because it is trying to change things which have come in 1991 and 1994 and 2000, etc. So you cannot actually give clarification to things which didn't exist in 76. And when you're expanding the definition of the word royalty here, it is not clarificatory, it is expanding it, and it will be prospective. So this is one very big clarity they brought to the explanation 4. And just to conclude on this point, they have also relied upon two Latin maxims, and the simple meaning of that is that the law does not demand the impossible, because by this explanation, the thrust was that someone who's deducting tax should have deducted tax, but the court said no, we should not have. And also the fact that where there is a disability that makes it impossible to obey the law, the alleged disobedience of the law is excused. So the defaults which were sought to be imposed on the assessee, if any, it was ensured that those defaults are not there. I think the court actually went into a number of other judgments, right from the AAR, the High Courts, the Supreme Court, and they have clearly held why certain judgments are good in law. They have relied on them, especially Erickson's case of Delhi High Court and others, and they have very clearly brought out that ultimately there is a difference between a copyright and a copyrighted article. One issue, sir, which is still bothering me, which probably time permitting, maybe Mr. Chaitanya or someone else, or maybe you can respond. So if I look at the judgment and look at especially the para 52 of the judgment, and it is actually, and the rules of interpretation is what I think I'm looking at here, and Sanjay sir can also answer. When they were concluding on the end user licenses, the court said there can be no doubt as to the real nature of the transaction in the appeals before us. What is licensed by the foreign non-resident supplier to the distributor and resold to the resident end user or directly supplied to the resident end user is in fact the sale of a physical object which contains an embedded computer program and is therefore a sale of goods, which, as has been correctly pointed out by the learned counsel, is a law declared by the court and TCS, etc. Is the thrust on sale of goods because it was a floppy or a disk given where the software was embedded? Because that is why it was goods. Will this definition or will this law apply to a fact when I today download a software, because the delivery today is generally not by way of a hardware. In late 90s, it was delivered by way of a hardware, by way of a hard copy of a disk. They looked at TCS. The question, sir, which is bothering me is, one proposition is that the arbiter of the Supreme Court is a law. The second proposition is one must look at the ratio of a judgment. What is the ratio? What is the principle coming out of the judgment on the facts of the case? If I have to look at the arbiter, it seems, and I'm not saying it is, it seems that someone may get up and say, well, in this case, they looked at TCS, sale of goods, disk, and it will not apply to a new way of delivering a software. If I look at the rules of interpretation on ratios, it is still a transfer of a copyright, the Copyright Act. Am I transferring my copyrights? Ultimately, under the end user license agreement, it is a question of what am I transferring, my copyrights. And I think that is where, sir, a couple of propositions which came out of this judgment are very important for some of us to kind of look at. That ultimately, I think the court said, is there a transfer of a copyright under the Copyright Act? And I think that's where one issue I'm leaving it open to me that it looks is that the Supreme Court judgment should apply to a software being delivered today also by way of downloading on internet or by whichever means. Because ultimately, in the earlier days also, I would have taken that software and put it on my system and start using it. It is just that the delivery is by means of a different mode. But the judgments which have been relied upon to reach a conclusion can be differently looked at, and that's the thought I thought I'll just bring out as one of the issues which someone may raise tomorrow to say that, well, TCS applies to a sale of goods and how will it apply here? So that was one of the reasons for the court to say that it is a sale of goods. So I will kind of leave it here. And I think Sanjeev wants to say something.
Thank you. In fact, I totally agree with you, Sanjeev, that Supreme Court has raised more questions than they have answered. I mean, they have relied upon several things. Sanjay, I will brought you in, but let me ask one question to Sanjeev, and then you can raise your point. Sanjeev, I mean, the whole decision came on impossibility of performance. I mean, particularly in respect of explanation for which Sanjay mentioned right in the beginning, which was introduced to cover, I mean, this type of situation. And you rightly mentioned that, it took 20 years for the case to come up to the Supreme Court. So it means that the years involved were much earlier than 2012 when explanation 4 was introduced. And they did, I mean, observe that it will have no retrospective effect, but prospective effect. So does it mean that, if any transaction happens, same set of facts after 2012, then under the Indian Income Tax Act, it will be liable to taxation as royalty? Is this view only on this point? I will not discuss about other things. Those I think after Sanjay raises, and I will put one or two questions to Chaitanya also, but only on this point. What is your take on this?
So I think it's a very nice point you're putting across. I think under the treaty, the things will still not change, sir. The treaty override, or for the non-resident, whether it is explanation 4, wherever there is a treaty override, until unless a treaty is amended, they would override. Having said that, I think under the domestic law also, the question of Copyright Act still has to be looked at. And until unless there is a transfer of copyrights, I think there the Supreme Court has left it open. Until unless there is a transfer of copyrights, I don't think there should be a problem. I mean, someone also raised a question to me, what will happen to a domestic person, because this judgment is under the treaty, sir, basically. They've looked at the treaty and have given a final view. Will 194J apply? Will 194 or Q apply because software is nothing but goods? Or will it 206C will apply, as a sale of goods, that the recipient will deduct tax? So I think, as you rightly said, I think some questions, and I think more questions will have to be answered in the coming years. It is not the end of the issue. I think it is the end of the issue, at least for some part, as far as non-residents are concerned, the treaty is concerned, and the interpretation of the treaty which has been done by the Supreme Court to give a final view. So that I think is settled, but the domestic issues, I think those have not been answered by the court to a large extent, and we'll have to keep on looking at the ratio to say that the ratio of the court is this, that the ratio of the judgment is this, and that is how it should apply. That is how I look at it, sir.
Thank you. Sanjay, you had a point. I will come to you, Chetan.
Yeah. I am just trying to say that what Sanjeev ji is saying is absolutely correct, because this is a new economy. These are the news which are happening. We are seeing that in the last few years there were more that we can have DEMPI, the Action 8 to 10 are talking about it, how the development takes place, how the enhancement takes place. How do you distinguish between that? So even at the international level, those things are coming in. So there are questions. But if I have to translate it further and go back to a simple copyright, meaning thereby I have a book, and I have certain thoughts of an author, and I say, I don't obviously, if I buy a book, I'm also buying the thought of the author. And then I read that, and based on that, I make that. Am I permitted to copy it and without the permissible limit? Or can I make another copy of it? That will be called piracy if I have not taken the approval, etc. So similar things should apply to a software, because the medium of delivery is not really, it's just one aspect. What is really important is the IPR. So what Sanjeev ji has said is exactly the same thing. Of course, some of the questions that you turn it into the legal aspects, they become slightly more what happens is the law that we see today, the tax laws or the IPR laws that we are seeing it today, are also evolving over a period of time. They are not static. They are not condensed in stone. The IPR itself is evolving. So Supreme Court did not move to the next level, etc. Will to try it at this point because they have done that. And given the legal confine, they had to be quite restrictive in giving their judgment. But the point which Sanjeev ji made is very important. That is that the medium or is it the IPR that has been transferred? And that is the central point.
Thank you. Chaitanya, you wanted to say something?
I just have to supplement what Mr. Sanjeev was trying to mention. Firstly, about his reading of paragraph 52. Where he posed a very vital question about the download of the computer software. Those days in TCS case, we had the medium as physical medium for, like a transfer of a copyrighted article, but now it will all be through a download. And what would be the characterization and how would one look at it is a very important question which Mr. Sanjeev raised, for which the possible answer could be the action 1 of the OECD, which has talked about the digital downloads, as causing the concern of the avoidance of tax because it would virtually a case of, a virtual PE and not a physical PE. And how has India reacted to it? India has brought in explanation 2 capital A. If you look at explanation 2 capital A, the first limb, which will talk about the transactions in goods, services, or property being carried out by a non-resident with a person in India, including download of the software or data. So look at this. The whole, thinking is that the download of data and the software will have the attributes of business income. And that is why it has been made an integral part of SEP. So that would indicate significantly that the worldwide proposition is that the download of software digitally will have to be necessarily regarded as business income, and the Supreme Court decision in engineering analysis would only supplement it. This is one point. Another point is about his explanation, 4, 5, 6 to be regarded as necessarily prospective, because if treated as retrospective, it would make you an assessee in default on a retro basis, which would mean that, we are, trying to put on you the concept of lex non cogit ad impossibilia. Law would not expect you to perform something which is impossible. The utility of this ratio could also be used in the context of royalty and FTS in a different context. See, we have been talking about royalty, FTS, withholding, etc. So you are aware that 2010 amendment, where an explanation was introduced into section 9.1, which has virtually undone the decision of Ishika Wajima Harima Heavy Industries in 288 ITR, 408, where they have brought in an explanation. So there is a very, important point now, which could be forcefully put across, is that if explanations 4, 5, 6 were to be regarded as prospective, why not explanation which is brought in under 911, and we could take the position that the Honorable Supreme Court has put its stamp of imprimatur in respect of even explanation to 9.1 as such. So those cases which would have clearly fit into royalty and FTS but would then relate to the period prior to 2010, where the services are not both rendered as well as utilized in India, could now be out of tax net. This is point number 2. And there was another point which I thought I'll have to supplement on engineering analysis. You asked a question in the beginning as to did Supreme Court not mention about copyrighted article?
Yes, yes.
In fact, it has been stated in so many words. In fact, if you would look at the Supreme Court decision on Dassault's principle, which it has completely endorsed, Dassault case, the Authority for Advanced Reading has talked about the copyrighted article. Now, the last point which I want to supplement is on explanation 4. And you asked a very important question as to forget the DTAs, fine. Those cases which are not covered by double taxation avoidance agreements are those cases where the benefit of DTA is denied because of PPT test, GAR, MLI, etc. See, DTA now is not, available on the platter. After the MLI has come in, Action 6, you have to have a PPT test coming in, SLOB test coming in. There are so many reasons why a DTA benefit, despite its existence, could be denied to you, in which case you will have to then come back to the domestic tax law and stay with explanation 4. That apart, in respect to domestic royalty payments, you will have explanation 4, and those guys will not have the benefit of DTAA. In which situation, the question is, Supreme Court having said that explanation 4 would expand explanation to, as Mr. Sanjeev most rightly put, they stopped there and did not indicate in what manner and how it will expand. The point for consideration is, if you literally look at explanation 4, what it says, transfer of right to use an information property right would include transfer of right to use a computer software, irrespective of medium through which it is transferred. See, the legislature has not used copy of a computer software. There's a difference between computer software, as is understood, as a computer program under Copyright Act, which is, recorded in a medium, which will then become computer software in terms of explanation 3. If the legislature intended to hit out at consideration for transfer of copyrighted copies, that is, copies of the computer program, they could have said that copy of a computer software. They have not said that. In the explanation, the language used is computer software. So therefore, a computer software is different from copy of a computer software. It's like copyrighted right and copyrighted article. On which premise, I would agree with Mr. Sanjeev that even after Supreme Court having said that the explanation 4 would expand the territory of explanation 2, even then, the Supreme Court's holding as to what is copyrighted right, what is copyrighted article would very much hold the field even after explanation 4 comes into play. This is what I just wanted to add.
Yeah, and sir, I'll just add, there are few observations the court has made which are very, very critical, just to add to what Chaitanya said. You see, they looked at, sir, the judgment of Delhi High Court in Ericsson's case, Nokia's case, Infrasoft's case, ZTE Corporation's case. So they looked at various judgments. While approving those judgments, the court said copyright is an exclusive right which is negative in nature, being a right to restrict others from doing certain acts. This is one point they observed. Then the court said copyright is an intangible, incorporeal right in the nature of a privilege which is quite independent of any material substance. Ownership of copyright in a work is different from the ownership of any physical material in which the copyrighted work may happen to be embodied. Parting with any copyright entails parting with the right to do any of the acts mentioned in the Copyright Act, and so on and so forth. Now, if you all put all these things together, sir, they say the right to reproduce and the right to use computer software are distinct and separate rights. The use of a copyrighted product cannot be construed as a license to enjoy all or any of the enumerated rights in the Copyright Act. So if one looks at 14A and B, A has certain parts defined and B is applicable especially to a computer program plus what is given in A. Until and unless those conditions are met, I don't think even under the domestic law, one will have a case to say that there is a right to use, and that right to use is equivalent to a right, for a royalty, because one is not transferring the copyrights. And that's where I think this judgment has such far-reaching consequences for many things to get interpreted, because sir, ultimately the Supreme Court's, there's a rule of interpretation, obiter. Obiter has to be read in a context. You will not read the obiter separately. I mean, I remember Justice Kapadia, addressing her in one of the conferences, they say when as the judge you write judgments, we don't presume that you will read each line and analyze each line and say you have said this here and you're saying something contradictory in the later paragraph. He says don't read each line of the judgment. See what is the arbiter, what is the ratio. I mean here, if you look at the ratio also takes you towards that only, that there has to be a transfer of copyrights, the rights as defined under the Copyright Act. So that is the mother law for a transfer of a copyrighted or a rights to the copyrighted article. And I think that's where this judgment decides whether retrospectivity, looking at the other laws. And I think one thing which I missed out, which is again coming to my mind, is I think somewhere the department had said, look, your own agreements are saying it is not a sale, and now you're saying it is a sale. So the court said, look, you have to look at the substance of the transaction. Just don't read a line in the agreement to say, well, in the agreement you're saying what you're transferring is a license and it is not a sale. And now you're saying, no, it is a sale. It is not a transfer of a copyright. Substance over form. You read the whole agreement as a whole and don't read one paragraph to say, well, you have said this yourself and it is contradictory to what you're saying now. I think so many such principles have come out of this judgment, which I mean, like many other judgments, as people read and analyze, whether Ishikawa, Jima, you read other judgments, that there are far-reaching consequences on retrospectivity of various explanations, as Chaitanya sir has already pointed out. I think it will have its consequences, and I think everything is not settled. The question is what is unsettled and what is left to be settled in the years to come will get defined.
I totally agree with you, Sanjay and Sanjeev. And the most important thing, I mean, which you said, and I think it must be a learning for all the participants here, is that whenever an agreement is produced or whenever you are drafting an agreement, the whole agreement has to be gone through, because only on the basis of one part or the other part, because in case of royalty, the most important thing which all the three gentlemen have nicely expounded is that what is being transferred is the core thing. I mean, is it whole? Is it part? To what extent, I mean, the licensee is getting the right? How, to what extent licensor is retaining the right? So all these things, I mean, as has been rightly, I mean, pointed out by Sanjeev, is the view which the Supreme Court has gone into. But Sanjeev, let me tell you what, there are a couple of things which are happening, and to all the three, is that, recently the government of India was analyzing, I mean, what is the proportion of royalty and FTAs, constituting, I mean, the amount which is there, is that they found that, the total amount of outflow in the form of royalty and FTAs has now reached almost, from 16% to 33% of FDI. So 33% go out, and that is causing real concern. And Sanjay will bear me out, because he was there when this report was being analyzed in the government. So they are, the concerns, and the concerns all of us are seeing. When UN came out with Article 12A and expanded the definition of royalty to include computer software in very clear words. So those are the things. So far as the lesson for the participant from this Supreme Court decision are several. And they must note it and at the same time get themselves prepared, because whatever the law is agreement. It has to be gone through and analyzed and look from the perspective of, as Chaitanya mentioned, the Copyright Act. Why it's not copy of copyright, and why it's only the software and not copy of the software. These are the finer distinctions which ultimately, one will have to go. Yes, Sanjay, you want to say something?
Yeah, I was just trying to pick up the one part of what you just mentioned about the government of India. I think the government is making not the justified intervention. I know there is some work that they are trying to do on that. There was some debate which was happening in the DIPP, previously DIPP, now DPIIT. and they felt that there is an excessive royalty moving out of the country. And one has to take a very, very calculated view of this, how this is happening, because it's very important and good that you asked this question, because I did the analysis for the automobile sector, which is one of the largest payer of the royalty, and rightly so, because automobile sector gets a lot more royalties, the change in the product, the platform, the new things, and all those things are happening in the automobile sector. And automobile sector has been one of the major, sectors which has developed in India, which is very, very competitive also. And we looked at it, and I compared it with the pure play Indian companies, which are not spending even 1 or 2% of the royalty of their turnover on the royalty. What the foreign subsidiaries or the collaborations, whichever I'm putting it all under the foreign within inverted commas, certainly their payouts are there. It really zooms over a period of time, particularly in 2004, 8 or 9 and thereafter. But you index it with the turnover, that the amount of turnover or the business that they have generated, the kind of product that they have brought in, it's a slightly different, and then you find that the amount of royalty per indexed with the turnover is not high. Over a period of time, it has not gone. In the quantum, may have gone, but the turnover itself has risen, and it brings the point that the royalty percentage, what is going out of the country, is less than 2%, and which is what was there earlier, which is what it is now. So it is, and this is a pitch, because if you try, because if I'm not developing ourselves, if I don't have a Microsoft or I don't have a Google, then obviously the royalties are not going to be coming to that. Compare this with China, how Chinese have done that. That if you look at how their growth has been, it has been far more steeper, because they are using the foreign IPRs to build their own products and then selling it for exports. Off late, and I'm saying off late, they are also receiving royalties, which basically means that over a period of time, they have developed their own IPRs and now have started receiving the royalty. And I think India would need to go on that particular journey and not be and Government of India needs to take a very calculated policy point of view, because they want to talk about the innovation, they want to talk about the IPR creation, they want to create a knowledge park. Then all these questions which are being raised by some policymakers have to be given a very cold view of how it is developing, what are the areas, and then look at a very informed view on the subject. And since I had done that analysis looking at almost like 600-700 companies and over almost like 15-20 years of the time period, I thought it will be important point to make on this.
Thank you, Sanjay. Chaitanya, you talked about soon after Sanjeev's explanation of the Supreme Court decision, you mentioned, the domestic aspect also. So if I look at section 194J, how do you think, what will be the impact of the Supreme Court decision, particularly, explanation 2, explanation 4, and how do we read, how will it span out? What are the things taxpayers or tax advisors should take care of?
If you would look at 194J and concurrently, if you would look at 40A1 and 1A, the royalty is defined as is defined in explanation 2. There is no reference to explanation 4. On this basis, the Mumbai Tribunal, in a decision called Sonata, held that though explanation 4 may expand the scope of royalty as is covered by explanation 2, Because 194J and 40A1 and 1A do not refer to explanation 4, for the limited purpose of withholding, the tribunal held that what is defined in explanation 2 alone will have to be taken. According to me, due respect to the tribunal's verdict, particularly post Supreme Court decision, the analogy that explanation 2 will have to be read in isolation, dehorse explanation 4 may not be very apt. So Supreme Court has very clearly said that the whole objective of explanation 4 on the basis of memorandum explaining insertion of explanation 4 is to expand royalty, the 2 in terms of explanation 2 clause 5. There is a specific mention of that. So therefore, I would rather say that the decision of the tribunal in Sonata will have to be considered as no more holding the field. Having said that, then I will stick to what I had always earlier stated, that while Supreme Court said explanation 4 would expand explanation 2, but no one has said how, in what manner. And the way I understand explanation 4 is that apart from dispensing with the medium of transfer, it would not do anything else, because as I've said earlier, I would still, you may call me a little too literal in reading. There is a difference between computer software versus copy of a computer software. So that not having been made in explanation 4, read with explanation 3, although the tribunal decision in Sonata may not be considered as a good law anymore, and although Supreme Court has said that explanation 4 would expand explanation 2, still it would not make any difference, and therefore even in the domestic market, unless what is paid is a consideration for copyrighted right, it would not fit into being called as royalty as per explanation 2 as supplemented by explanation 4, and therefore there should not be any change from the existing position.
Thank you, Chetan. Sanjeev, when the Supreme Court was considering, the 4 scenario, and most of them were, in respect of shrink wrapped software. But let me make it slightly complex. What will be the impact of the Supreme Court decision in 2 scenarios? One, embedded software, and the other, customized software. So, will it, in both the cases, what learning one should get from the Supreme Court decision in respect of these 2 types of software?
So I think partially or partly probably we have discussed this issue to some extent, because one of the 4 issues or one of the 4 contracts before the Supreme Court was where the software was bundled with the hardware in a way. So that issue in a way has been looked at. If you look at the customized software, I think the issue of copyrights will still come in, because what is being transferred? Even if I customize it, it will depend on, is there a partial transfer? Is there a full transfer of copyrights? And if there is a transfer of copyrights, yes, then it will amount to a royalty, but I think otherwise no. So that the principle which is coming out of this judgment is that there has to be transfer of copyrights. And that is what I think the underlying principle is. So in I think both the cases we can rely and take the ratio of the court judgment. I think Chaitanya may have a different view. Maybe he wants to add something.
Yeah, Chaitanya.
Not actually a different view, just to support your view. If you look at the TCS case in 271 ITR 401, while the Supreme Court dealt with the shrink-wrapped software specifically to call them as goods, they did not rule out the customized software from being called as goods as such. They only left it open. It would depend on the terms of the contract. So therefore, merely because an item of software is customized, it would not any less be goods. It could very much be goods. So this is how, in fact, Supreme Court has very clearly stated so in its decision in TCS case. And therefore, even if it were a customized software, let us say you would develop a customized software to me, but give me with the limited right to use it and not to do any of the rights specified in Section 14 of the Copyright Act. which would mean you are still the copyright holder. I am still only a mere licensee to use the copy of the computer program, and therefore the decision should not make any difference between the customized software and shrink wrap software, except that it is a lot easier in the case of shrink wrap software to prove it. In the case of customized software, we'll have to go an extra step to establish it, because there is nothing called EULA as such. A separate agreement will have to be seen. That's the only difference.
I make one more addition, sir, to this point. I think for the benefit of my younger colleagues who may be on this webinar, I think they must also consider always, you see, when you're reading a judgment of a court, also always remember the judgment relates to which year and what facts were there. Not only the principles which are coming out, because the change which is happening, sir, because of technology. And the reason why I'm saying this is that one of my clients in 96, 97 had claimed reduction under 80IA on the word manufacture. Now, what the company was doing, they would import software, import the copies of the software, say buy a software, and in India, what they will do is they will copy that software on a disk and sell it to you or say Chaitanya or say Sanjay sir. And the question was that when you take a floppy disk, which is a plain floppy disk, and when you copy this software through a machine on this disk, is this manufacture? I mean, in today's day, someone may laugh at me and saying, what are you saying? Today, you have floppies and you have, how much copying takes? I'm talking about 90s when copying was a manufacturing process. A machine was required to copy something from a disk to another disk, error-free, etc., etc. And there's a court judgment saying, not only the gramophones case where we had those old audio tapes, because the product undergoes a change, it is irreversible, etc., etc. The court said it is manufactured and ATI is available. In 96, it was manufactured. Will it hold good today? The answer may be different. So I think the learning is also that when you're looking at a case like Chaitanya sir pointed about Sonata's case, why it may not be a good law today looking at the court judgments today. And that is where I think the learning for all of us is that when you're reading a judgment, please see the time which it pertains to, because the facts have undergone a change. And with the technology changing, sir, so many things will change in the next 2 years, 3 years, 5 years. I mean, the change which we are seeing today is so huge that what was not possible 10 years back, everything has changed today. I mean, we are working from home for the last 1 year, all of us, and working reasonably well. Working from home was not a possibility a year back. One was used to going to the office only. But that is how change is happening. This change is very, very destructive, constructive, I don't know what, but this change will bring up new things, new business models, and I think we need to be cognizant of that when you're applying these principles to the facts and the law as it will evolve. I thought I'd just kind of add this because I keep reading, at times, and you keep reading and keep thinking as to what you read 5 years back, does it still hold good? At times it may not.
Thank you. All these points are very, very important. Chaitanya, when I think about royalty, and Sanjay would add to this, whenever, what are the, some sort of a thumb rule? Can one create a thumb rule about deciding whether the payment which is going is in the form of royalty or anything else? Is that if I am making a payment for only my personal use, then there is no doubt that this is not royalty. But if I am making a payment for making copies of that and selling it or using it in my own business, or I get the right to copy it and sell, then in that case there is a probability that it will be in the form of royalty. The payment will be royalty. Very, very, very basic, thing that when our participants, most of them, when a certain query comes to them, can they to start with apply some sort of, the basic thumb rule, Chaitanya, Sanjay?
Yeah, if I may say that the thumb rule as such is not available, nor is it desirable. as Mr. Sanjeev mentioned, a lot of things will have to go on the, like factual setting. The texture and the context, both are extremely important here. So the thumb rule may not be desirable. Instead, what I would suggest for the readers is just to understand that in order that what you pay is royalty, it has to have trappings of technology transfer, whereby what is your technology has become my technology, where I have a right to exploit it. And how will I exploit it? Not every commercial exploitation would amount to exploitation of copyright. It is that exploitation which is recognized as a copyright in terms of Section 14 of the Copyrights Act. Because computer program is a literary work, so that is dealt with in Section 14A, all those rights. In addition to that, you'll have Section 14B2 rights. So what the reader will have to do is he paying for any of these rights? When he's paying for any of these rights, obviously, he would be acquiring copyright right, and the quid pro quo will have to be necessarily regarded as royalty. This could be the, if I may call it as thumb rule, this could be the thumb rule, and nothing beyond this.
Very good point. Anything you like to add, Sanjay? No? So, Sanjay, in the beginning when you were talking...
Just one point. I think what Chaitanya is saying is absolutely correct. There has to be at the bottom of it an IPR, a usage of the IPR, the transfer of the IPR, and that is what the Section 916, Section 4, that is what it is talking about, that where is the IPR? And if you, it's not a law which has to be, and the IPRs, which are the coverage of this, has to be in the tax laws or, as we saw also on the tax treaty. Because there are multiple kinds of IPR, like out 7 of the IPR, but here
I think we have lost it. Yeah.
I think we have lost. So by the time he comes back, and I think we may be running short of time, and I would like Pramod ji to let us know. If you would like to share a couple of questions before I ask, the concluding questions to all the panelists.
Yes, sir. The session have been appreciated by various participants, and many questions have been asked. I don't think so we'll be able to ask all the questions. Of course, panelists would be able to answer all, but the time being short, let me take just one or two. One from Atul Puriji from Delhi, a dear friend, who says that what will be the status where multi-user software is made available and each user downloads it under a license?
Yeah. May I answer this question?
Yeah,
Chaitanya sir, please.
According to me, it would not make a difference whether it is single user or multi-user, as long as the rights do not confer any of those which are mentioned in Section 14 of the Copyright Act. So this is the thumb rule. The thumb rule is, as SP sir rightly asked, as to is there a dent in the copyright owner's right because of your payment? So that is not happening here. So multi-user license is just for the sake of convenience. It would not make any difference.
One question from Mr. Deepak is, taxability of earning from YouTube channels will be treated as royalty. If the content is carrying copyright, then the situation would be different. This was one of the earlier questions. I took one of the earlier questions. Later ones are also there, but just few questions.
Sanjeev, can you add?
No, so I think I'll leave it to Chaitanya sir to answer it, because this YouTube technology is, I don't know how it is playing these days.
Okay.
as long as there is a 14AB issue, as Chaitanya sir said earlier, to my mind, one has to probably read these documents a little more carefully, because very loosely answering a question which can go either way, to my mind, I think I would restrain myself. But if Chaitanya sir wants to add something to it, happy to listen to him.
see, it depends on what are you paying it for. See, YouTube offers you a facility. YouTube offers you the way I understand, correct me, Pramod, if I have not captured the facts properly. See, YouTube has offered you a facility where you would host your, video.
Videos.
Yeah, you host your video. For this facility, you make payment to YouTube, correct?
No, we earn. It is about the earners. They don't pay a single penny. They earn from.
How do they earn? What is their revenue stream? How do they earn? Let us examine. For example, I have placed some video programs in the YouTube, and there are viewers, and I would earn. So, what will be the revenue stream for me?
What happens actually when there are very YouTube bloggers who put their videos, and then what happens is that YouTube puts certain advertisements, and based upon the viewership and the clicks, the revenues are generated, and the bloggers are, the YouTubers are earning in millions and millions and billions, I would say.
Right.
So that earning would be the nature thereof.
Yeah, now I have understood facts a little better. The ad revenue which YouTube would earn, that will share with me, right? Because of my program being hosted on the YouTube, will I have to pay it? Will this be called as royalty? See, now for it to be called as royalty qua me, again, thumb rule principle. Am I giving up any of the rights which I've had in my programs under Section 14 of the Copyright Act to anyone? So after all, what is happening? I am only placing my program in the YouTube and millions would view it, ad revenue would come and that is shared with me. That's it. So the sharing of ad revenue would not be consideration for parting with my copyright right. And therefore, it would not fit into being called as royalty under any circumstances whatsoever.
So, Chaitanya, a follow-up question can be, will it amount to use of equipment? Because at the end of the day, it's like some platform. So, the tax department...
It's a very good question. The only point is that the YouTube here is only providing a platform. It is doing nothing else. So, and the generation of the income, as you just mentioned, is based on certain advertisement. So it's like, where is the IPR transfer? Where is the usage of to the YouTube? There will be a payment, which will be a different task. But the question that you have asked is that when they generate the money, and out of that, through the advertisements, etc., where is the IPR involvement? It's only a platform. Platform could be anything, It's like, and then you generate that. When I am making payment to YouTube, that is a different task, whether I'm using their IPR and to that extent what the agreements are. But here the question is about the generation of income that I'm doing based on the advertisements, which has nothing to do with the YouTube.
It is basically based upon the clicks. Number of clicks you earn.
So, Sanjay and Chaitanya, what I would like to understand, there is no IPR involved. Fine.
Yeah, there is no IPR.
No use of IPR, fine. But the definition of royalty includes also use of equipment.
Wonderful. It's a very good, very, very important question. Yes. Yeah, I am too glad to take this question. Because if you would look at explanation 2, clause 4a, consideration for use or right to use industrial, commercial, scientific equipment would be called as royalty. Then you have explanation 5, brought in by Finance Act of 2012, which will dispense with 3 aspects. It will dispense with whether I am in possession, whether I am the direct user, whether the location of the equipment is in India. Right? But the moot point is, in order that it will fit into being called as royalty, it has to be consideration for use or right to use equipment. Now, what I have done, I have had some programs which are placed in the YouTube channel run by somebody else. Here, who is using the equipment? It is YouTube which is using its equipment to host this facility to me. I am not using the equipment, I am using the facility. So there is a material difference between use of equipment by the service provider and the use of equipment by the service receiver. To give you an example, when you board the metro train, you are not using the metro corridor, metro station, metro cars, metro tracks. No, you are using the facility. It is metro company that is using those equipments for the purpose of providing you the service. For which I would invite your attention to a very good decision of the Authority for Advanced Ruling in ICAI Corporation case. ICAI Technologies case reported in 404 ITR 495. Please look at paragraph 13.10. There they distinguish between use of equipment by the facility provider versus use of equipment by the payer. So here I am not paying for use of equipment. I am paying for use of facility. And therefore, as long as the consideration is not for use of equipment, it's for use of facility. Facility is a much larger basket. It is a bundle of rights. So you cannot vivisect of $100 which I paid to YouTube channel as $10 for the equipment, $10 for the platform. No, there is no vivisection which is permissible here. So I pay for the facility, and therefore it would not amount to use of equipment. And one more thing is, if you look at explanation 4 carefully, it does not dispense with the user test. It only dispenses with the direct user test. User test is definitely to be satisfied. I had to pay for the use of equipment. User test will have to be satisfied. What is only dispenses with the direct user test. There could be indirect user of a distant equipment I could indirectly use, like satellite transponder. I cannot go to space and use the satellite. So those are the situations which are covered by explanation 5. Therefore, nice. With the explanation 5, it would not cover
Very
it.
Nice explanation. It's really, I think it must be eye-opening for all the participants, because I didn't think from that perspective, to be very frank. It's really nice explanation, Kevin. So, Pramodji,
Sanjeev sir wants to add.
Sanjeev.
It's like there is an old judgment of the Chennai High Court where they have given an example that when you buy an air ticket, what are you buying? You're buying an air ticket to go from Delhi to Bombay. You're using software. The plane is run by a software. There are services provided. You're taking a service. You're not buying. You're not paying for the software. So I think it is again the totality. And as I initially said, when Pramodji said YouTube revenues, the revenues will come from where? How am I getting paid? What am I getting paid for? Clicks means what? How do you count it? Did my agreement say that I will share this with you? Etc. Etc. There will be so many things we'll go into defining the rights and responsibilities. And I think as long as, again, the 14AB are so important to look at for any copyrights and any royalty issue. And other things also will have to be looked at. I think in tax, one keep finding solutions and one keep finding problems in every solution. And one has to look at solutions more and not problems. And they keep getting resolved as you go along. So I thought I'd just say just these two things, nothing else. Thanks.
We survive because of problems.
Yeah, absolutely. Especially the lawyers.
There are various questions on the new UN Article 12B, which I suppose we don't have time so we can discuss that. A few questions are there where we can see this excellent deliberations today. Just sharing you my screen from where you can share it, because lots of questions have been asked earlier also कि कहाँ से देख सकते हैं. So just sharing that, you just go to ICAI website. It is on the screen right now. Go to the committees, and if you go for the non-standing committees, you go for the Committee on International Tax. So here when you go, you have all these seminars webcasts. So all earlier ones are also there. This one also will be uploaded. Thanks to the Secretariat under the leadership of C.A. Mukta Katuya Brahma, who has done this excellent job. All the webcast, anytime anyone can see. So this material is available. Also, if you want to have any of our publications, so publications are also here, anyone can download. So sometimes we need materials on the international tax issued by ICAI, and also updates are always there whenever the international tax subsidies are there. So all are there on this website. So anyone can use it, right? I was just sharing this for the benefit of all.
Thank you, Pramodji. I think we are coming to the close, and it has been. I have many questions. So I think we should have part 2 of this webcast. We have been, in fact, warmed up to many intricate questions, but it was really, nice deliberation, erudite deliberations by all three of you. It's a learning for all of us, all the participants. I'm sure participants must have been immensely benefited by the discussion. The best part which I liked, this deliberation is that you didn't, quote too many cases. And you talked about provisions, the basic things, which, when the participants will listen again, at slightly ease, they can do it, or they should do it couple of times to get the real impact of what Sanjeev, Sanjay, Chaitanya has said. You will appreciate, several aspects of issues related to taxation of royalty. I'm really honored to be, the moderator of this session.
We are grateful to you for, having carried us through quite very well. And
Great. Thanks to all the three panelists, CA Sanjeev Chaudhary ji, CA Chaitanya KK ji, Mr. Sanjay Kumar ji, and of course our excellent, knowledgeable moderator, I would say, SP sir, SP Singh sir. Great, and what really thanks to all of you, and also to the Secretariat, who is doing a wonderful job on this Committee of International Taxation, Mukta ji, Vikas ji, Gaurav ji, all others who are doing excellent job. And thanks to all the participants for joining in on the Monday morning 11 to 1 is really great. And I hope you would be telling to all other friends of yours that they can further also see this video on the site which I just showed. Thanks to each and everyone for the.
Thank you.
Thank you very much. Thank you very much. I appreciate it.